Welcome to this latest video update for the Bankers Investment Trust. Today I'm joined by the Portfolio Manager, Alex Crooke. Alex, thank you very much for joining me. Now first off, it's been 3 months since we caught up to talk about bankers. So we're 3 months older, but are we any wiser? What have you learned in the first 3 months of 2019?
Well, I think looking back over the first quarter of 2019, I think maybe we haven't really learnt an awful lot new, if we're honest. Some of the big sort of macro deep questions asking ourselves about trade wars, about some of the politics around, well, let's just call it Europe and the UK, still really unresolved in many ways, and therefore the outcomes difficult to calculate. But I think what we have learned a little bit more is about how this is interacting with economies, so how economies and underlying issues for companies that we invest in are playing out. And actually, I think at that level, a little bit of a slowdown coming. We've seen that in the figures at the back end of 2018, and we're hearing that from our companies, a gentle slowdown in activity, but nothing disastrous, nothing to worry about too much. And actually, we're seeing some better numbers coming out of China, starting to improve towards the end of this first quarter. So I think the background is still supportive for making investments. We've had a stronger market though in January and February, and that's carried through into March. So equity markets have risen in the first quarter of 2019, but they then fall quite a lot in the back end of 18. So to some extent a recovery bounce. I think to get the conviction to move on from here, we do need some resolution around European politics and trade wars between China and America.
Okay, and how did the trust perform during this period?
So I think performance yesterday I've been really pleased with actually. We've again taken a more cautious view into the year, and that's helped a little bit. So some defensive sectors have done very well. Safety first to some extent in an environment where the outlook is still a little bit cloudy. And actually our asset allocations, so the mix of where we've invested around the world, has worked really strongly for us. We've seen a very strong recovery in Chinese equities, and we've got a big exposure within the portfolio both to Hong Kong and directly in China through A shares. These are listed directly in Chinese markets. So I think both those areas, they've done really well this year to date. Our Asia portfolio has done well as well in a broader sense. So we've got some of the asset allocation right. A slightly defensive mix in developed markets rather, has done very well as well. So I'm pleased with the activity so far.
And in terms of the portfolio activity during this time, have there been any strategic or tactical movements that you can share with us?
So I think tactically what we've been doing is again continuing to take profits in companies we just feel is expensive, where the market is assuming quite a strong recovery in earnings or stability in earnings, where we're just sort of a bit more cautious. So we're continuing just to weed out names here and there, sell some positions that we think are fully valued. And this recovery in the first quarter is allowing us to take a few more names out. So gearing has fallen a little bit, and just a little bit of nudging around some of the portfolios. So taking a little bit out of North America, which again has had a strong recovery, a little bit out of Europe as well. We've maintained Asia exposure, where I'm expecting a second half recovery to come through. And again, I think that gives us a little bit of firepower left, just if we see some better resolution to trade talks, which I do expect in the second half, but I think they're towards the end of the year rather than the middle of the year. Then we've got some capital to deploy, some cash to invest, and I think that's probably the right prudent way currently to be managing the portfolio.
Now we've touched on a slowdown in the global economy and a trade war between the world's two largest economies. Now where does that leave your outlook for the remainder of the year?
Okay, I think broadly my outlook for the remainder of the year is general stability, but I think within that the markets could have quite a strong recovery at some point. I think it does need clarification over trade. I think trade talks, trying to sort out essentially the two biggest economies in the world are China and US, so just trying to understand the relationship between those two economies. It does drive everything else, I think, around the world in terms of economic activity. I think there's progress can be made, but in these cases it ebbs and flows, and there's good news and bad news. So I think continuing to just take some profits, reinvest if markets come back a little bit, is probably the right strategy for the next 6 months. And I think as we look into the end of this year and the year following, I think there is optimism to feel supportive. The US have held rates. I think that will in itself help markets establish themselves. Inflation is still low around the world, so I think there's good returns to be made. but I think you can take your time this year and just have a balancing act between trading out of expensive stocks and back into cheaper stocks.